Hello, welcome to another episode of Charles Reviews. Are you a bull or are you a bear? Today we are going to be talking about Bitcoin market sentiment. The focus of this video is really twofold. First, I'm going to be looking at what world leaders and people in government are saying about Bitcoin, and then I'm going to be looking at an analytical framework that's used by George Soros, the man who famously broke the Bank of Britain back in the early 1990s when he shorted the pound. Make sure you subscribe to my YouTube channel and hit the notification button. Let's get into it. So there's been a lot of noise online about Donald Trump to do with Bitcoin and also other things. I know he's quite a controversial figure, but the topic of today's discussion is Bitcoin. I don't cover current affairs yet. So what's Donald Trump been saying? Well, he says that he's not a fan of Bitcoin and other cryptocurrencies which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trades and other illegal activities. In response to Donald Trump's tweet, we have John McAfee, who actually came out and said, revolutionary technologies like the automobile, landlines, telecommunications, the internet, revolutionary technology is always adopted, is always used by criminals first. He gave an example of the car when bank robberies increased tenfold in the early part of the 20th century because obviously you had the getaway car, more efficient than horses. His point was the fact that Bitcoin is used for nefarious means is no different to, say, using fiat for criminal activities. Criminals are always going to be using technology to try and gain an advantage over the law, and it just creates this cat and mouse game. Alongside Donald Trump, let's see what some of the other world leaders have been saying in regards to Bitcoin. So we have Jair Bolsonaro, the president of Brazil, who says that I do not know what a Bitcoin is. Fair enough. Then we have the president of China, Mr. Xi Jinping, who states that a new generation of technology represented by AI and quantum information, including mobile communications, Internet of Things, and blockchain, is accelerating breakthrough applications. In other words, he's bullish. Then we have Vladimir Putin. Federal laws are aimed at the development of the digital economy, including determining the procedure for blah, blah, blah. In other words, Putin doesn't seem to be pro-Bitcoin. He's very on the fence. And in the past, he's come out and said, he's pro-Bitcoin, he's pro-cryptocurrency. And at other times, he said he's anti-crypto and it isn't something that states should be involved in. So he's very ambivalent. He's a hard man to read. Then I love this one. We have Arun Jaitley, the finance minister of India, who says that the government does not consider cryptocurrencies as legal tender or coin and will take all measures to eliminate the use of crypto assets in financing illegitimate activities as part of a payment system. Then we have Shinzo Abe, the Prime Minister of Japan, who actually gives us a very positive take on the Bitcoin scenario. He states that blockchain has the potential to make various industries safer and more efficient. And finally, we have Alexander Lukashenko, the president of Belarus, who states that we'll build farms and we'll be mining these Bitcoins and selling them. They say that when there is a Bitcoin, there is no problem to sell it. No doubt, Lukashenko's obviously been doing his homework when it comes to Bitcoin and the Bitcoin white paper. Maybe he can teach us a thing or two. So how do you gauge information online so as to make better informed decisions? Because there's basically too much information out there for any one man or woman to understand and analyze. If you look at something like Cointelegraph, we can see the latest news states that BitPoint reveals amounts stolen, pledging to reimburse crypto users. Bitcoin price eyes 11,000 And then if we come over to Decrypt Media, it states that Libra goes to Washington. Loads of senators are likely to show up and grill social media. Vitalik Buterin uses Bitcoin Cash to improve Ethereum scalability. My point in all of this is that it's useless. This information, we can't use it to turn a profit. It's too out there. We need to cut through all the noise and come up with a systemic framework so we can better make decisions. And if you look at someone like George Soros, the billionaire investor, we can learn quite a lot. So in 1987, George Soros, he published a book called The Alchemy of Finance, a very smart book. You should definitely go out there and read it. And the crux of his argument was essentially reflexivity. Soros basically stated in his theory of reflexivity that the markets aren't determined so much by fundamentals or by price, but by a feedback loop that feeds into our perceptions. In other words, we make decisions based on our perceptions of other people's perceptions, and that creates misinformation and distortion within markets, which is precisely why it's so difficult to gauge price action and make better informed decisions. Okay, so hang in there. I'm going to do my best to try and explain to you George Soros's theory of reflexivity. It's not really straightforward, and it's going to give you a headache if I'm honest with you. So we have the fundamentals. The fundamentals are determined really by looking at the technology. However, many retail traders, many retail investors don't really understand, nor do they care about the cryptocurrency technology they're looking at. So this creates misinformation. This feeds into price. Price is created and destroyed through different viral communication channels. You've got Reddit, you've got Telegram, you've got Twitter. This is how people use information to their best advantages so as to manipulate the market. And this creates a perception of the market. You've got regulatory paranoia, which remains rampant as nations evolve with their frameworks for really announcing what they're going to do to Bitcoin, be it bullish or bearish. And this feeds back into our perceptions, where you have information which is essentially hegemonized by those in the know, crypto influencers, market makers, big institutional players. And this feeds back into the fundamentals, where you have untried and untested technology, and the process goes on and creates a cycle. This could be a vicious cycle, or this could be a positive cycle. It depends on where the market's going, whether it's going up or down. If we were to dissect this, to deconstruct this, we can see it here with this diagram in one of Soros's essays. Multiple agents equals multiple subjective realities. The agent's subjective reality creates the intention, say to buy XRP or Bitcoin in this instance. This creates a manipulative factor, which leads on to fallibility, whether they're right or wrong when it comes to a trade setup, which creates an objective reality. Did they lose their money? Did they make money on the exchange? This creates more cognitive biases, which leads into more misinformation and fallibility, which creates more perceptions for insider information and misinformation, which creates that subjective agent's reality, and it goes on. So this is really difficult for me to explain, and I've done several takes of the video to try and really crystallize my thought. It's very, very difficult. Basically, when you look at information, when you gather information online to do with a coin or a project, you need to look at the future as a set of events in time. The future is a plural set of events. The future isn't a singular event, and this is why relationships fail. This is why businesses fail. This is why startups and investors fail and lose money. It's because they predicate the future as a singular event when really it's actually multiple events. And what your job is as an investor is you need to take all those events and you need to work backwards in a retrospective fashion. You need to take baby steps backwards, and you need to understand every potential future event to come to a conclusion. You can't sit there in your chair and say, oh, the future's X, when actually the future is X, Y, Z, A, B, C, D, E. It just goes on. There's many different pathways, and it's impossible for you to anticipate every pathway, but you can do a lot of homework on your end of the research to really understand what the future's going to be. So thank you so much for taking the time out of your day to watch my video. Really do appreciate it. Make sure you subscribe to my channel, hit the notification button, leave comments down below. You can also join me in my Telegram group. I'll put the link down below in the description, and I apologize if I've given you a headache. I know I certainly have one. Thank you for watching, and I will see you in the next episode.